Imagine this. You work tirelessly your whole life, paying taxes on every dollar you earn. You follow the rules, you do your part. But somewhere, in a corner office high above the city streets, a billionaire smiles. Not because they're richer, but because they barely pay any taxes at all. Hi, I'm Nate, and today I'm going to pull back the curtain on a secret the super rich don't want you to know. The clever legal strategy called buy, borrowed, buy. By the end of this video, you'll see exactly how the ultra-wealthy turn billions into tax-free wealth, while most of us keep handing our money to the government. Now, stick with me because what I'm about to explain sounds like a cheat code for life, and the craziest part, it's completely legal. First, let's talk about the problem. Most people, maybe even you, live paycheck to paycheck. You earn money, the government taxes it. You spend money, you pay sales taxes, and eventually, when you pass away, inheritance taxes hit your family. It's the full circle of what feels like unavoidable taxation. We call this the working class tax trap. Now, imagine someone with $100 million. If they earned it the normal way, through a salary or business profits, they'd owe tens of millions in taxes. But the wealthy don't earn wealth the way most people do. They buy assets, borrow against them, and pass them on without ever cashing in. This is where buy, borrow, die comes in. Step 1. Buy. Simple word, but powerful. The rich buy things that grow in value. Stocks, real estate, businesses, art, and rare collectibles. But here's the secret. They don't just buy things to enjoy them. They buy them because these assets grow over time without being taxed until they sell them. Let me give you an example. Imagine someone buys a painting for $1 million. 10 years later, it's worth $5 million. Most of us think, great, I made $4 million. I owe capital gains taxes. But here's the catch. The wealthy often don't sell. By holding the asset, its value increases on paper, but the IRS doesn't tax it. That $4 million? Untaxed. It's called an unrealized gain, and the law treats it differently from your paycheck. This is the first part of the magic. The rich let their assets grow, while the rest of us are taxed on every dollar we earn immediately. Step 2. Borrow. This is where it gets really clever. Instead of selling assets and paying taxes, the wealthy borrow money against their assets. You heard that right. They take loans against their own wealth. For example, let's say someone has $10 million in stocks. Instead of selling, they go to a bank and borrow $5 million using the stocks as collateral. Banks are happy to lend because the stocks are valuable. The borrower now has cash to spend or invest, and here's the kicker. Loans aren't taxable. That's right, borrowed money is debt, not income, so no tax is owed. This is like having your cake and eating it too. They get cash to live lavishly or invest further without triggering a tax event. Meanwhile, most of us have to sell investments, pay taxes, and then spend the remainder. It's the ultimate wealth hack. And they do this repeatedly. Buy more assets, borrow against them, invest more, repeat. It's a cycle that grows wealth while avoiding taxes. Step 3. Die. Sounds morbid, but stay with me. When the wealthy pass away, their assets don't disappear. They get a special treatment called a step-up in basis. Here's what that means. If someone bought stock for $1 million and it's worth $10 million when they die, their heirs inherit the stock at its current value, not the original purchase price. The $9 million gain? Never taxed. If the heirs sell immediately, they only pay taxes on the difference from the stepped-up value, not the full gain. Many estates never sell, passing the wealth untouched through generations. In other words, death becomes the final loophole, turning billions into multi-generational, nearly tax-free wealth. It's a system designed to preserve wealth across generations, and it's completely legal. Let's make it concrete. Take Jeff Bezos or Elon Musk. They don't get taxed the same way you do. Bezos owns billions in Amazon stock. He doesn't sell it, he borrows against it. Musk does the same with Tesla stock. Both live like billionaires without paying income tax on most of their wealth because it's tied up in assets, not wages. Another example, Warren Buffett famously lives modestly compared to his wealth. He borrows and invests instead of selling, legally reducing taxable events. These aren't isolated stories, they're the standard playbook for the 1%. And it's not just tech billionaires. Real estate moguls, hedge fund managers, and even celebrities use buy, borrow, die to shield massive wealth from taxes legally. It's a system built for them, and it works because the rules were written with capital in mind, not labor. Now, you might be asking, Nate, why should I care? I can't become a billionaire overnight. True, but understanding this matters because it shows the system is heavily tilted. While everyday Americans are taxed on income, payroll, and consumption, the ultra-rich grow wealth without paying their fair share. This impacts everyone. Less tax revenue from the rich means higher taxes on the middle class, less public funding for schools, hospitals, and infrastructure. It shapes the economy, society, and the very rules that govern wealth. Knowledge is power. By knowing how the system works, you can make smarter decisions, advocate for fairer policies, or at least understand why inequality continues to grow. So, what can we take away if we're not billionaires? First, think in assets, not just income. Invest in things that grow over time. Stocks, real estate, small businesses, things that appreciate. Second, consider strategies that defer taxes legally, like retirement accounts or tax-advantaged investments. Third, be aware of debt strategically. It's not always bad when used wisely. Borrowing against growing assets can be powerful if done carefully. Even if we can't replicate buy, borrow, die, we can learn the mindset, build, leverage, and grow wealth strategically. So there you have it. Buy, borrow, die. 3 simple words, one powerful strategy that explains how the rich actually avoid taxes. It's legal, it's clever, and it's why billionaires keep getting richer while most of us pay our taxes on every paycheck. Next time you hear someone say the rich don't pay taxes, now you know how. And if you want to take a page out of their playbook, start thinking like an asset owner, not just an income earner. Thanks for listening. I'm Nate, and if you found this eye-opening, hit like, subscribe, and share this video so more people can understand how money and taxes really work. Knowledge is the first step towards fairness, and now you're a little richer in understanding.